Hey everybody, I hope you're all doing well. In today's case study, I would like to go over a 5-hour trade on Euro USD that I took last week. Now, before we do that, I'm here in the Discord, as you can see, and I'm going to go back to this message here, back on February the 15th, where I actually annotated these two zones here, this 15-minute supply zone and a 15-minute demand zone, along with a dashed line. This ended up being pretty accurate in terms of how price played out. Didn't catch a bullish move, but I did capitalize on some bearish momentum after reacting to this 15-minute zone. So that's what we're going to be going into today. But I just wanted to mention here on the Discord, these are the types of things that I like to provide, right? I like to annotate the best zones to trade from, and then it's up to you guys to trade from them, right? Like I don't want to provide any signals. I try not to include my entry parameters or anything like that because they can be very subjective. I don't want to get mixed into that. I just like to provide the education and give you guys the best zones to trade from. So that's exactly what happened here. Now I'm going to head over to my charts and show you guys how I was able to capitalize on some short moves from this 15-minute supply zone. So let me jump to the 15-minute time frame because that's where the main analysis took place. Let me just zoom out. I don't know why my charts are lagging like crazy right now. Hopefully that stops. Okay, so on the 15-minute perspective, we obviously had some major bullish momentum ever since we hit this demand zone quite some time ago. However, we left this huge imbalance right here. Okay, so I was anticipating price to be bullish up until we reached the supply zone that was responsible for this massive impulsive move that ended up breaking structure. Okay, so if I just zoom in a little bit here, we can clearly see that the point of origin for this break of structure and the impulsive inefficiency in the market was because of this small bullish candle just before the large bearish candle. Okay, so that's my supply zone. Of course, I'm on the 15-minute time frame, so I labeled it 15M. So, okay, let me drop down to the 1-minute time frame. This is where I actually took the trade. Let me just clean this up a little bit so it's not so clustered. I'll pull back the demand zone the supply zone until about here. That way we can focus on the point of interest that I chose and the market structure that surrounded it. Okay, so we've clearly tapped into the 15-minute supply zone. So we saw a very, very clustered section of higher highs and higher lows here. And then we created some equal lows right about here, representing liquidity. And then we started trading up again, but failed to create a new high, right? We didn't surpass this high. So that's a good sign that market structure may be changing soon, and this 15-minute supply zone is going to be respected. What comes next is, of course, a break of structure. Well, I labeled it a minor break of structure. Some might call this a chalk, change of character. I choose not to use that term for many different reasons. I'm not going to get into that, but it's basically the same thing as a minor break of structure. I just like to simplify things, so I only use break of structure and minor break of structure. To be quite honest, if I wasn't teaching, I probably wouldn't even put these on my chart. I like very clean charts. I don't need to annotate things, but I do for educational purposes. So if we take a good look at what caused this minor break of structure, it is, of course, this bearish engulfing formation, which is an order block. That I've highlighted here with my tool there, the Ganbox tool. So some might say, well, this was the last low momentum point in price before the impulsive break, and you would be 100% correct on that. But here's the thing. If you paid attention in the premium versus discount lesson, if we drag a Fibonacci tool or a Ganbox tool from the high to the low, this low momentum area of supply is actually right at the 50%. So that's kind of no man's land. We don't want to be trading from there, right? So keeping that in mind, this order block here would be the extreme. So that would, of course, be the best place to target for an entry. And that's exactly what I did. I chose to target the 50% for this trade. And I believe I only used 0.25% risk on this trade, just because the market conditions haven't been too favorable lately. So I haven't been going like full 0.5% or 1% risk for a lot of different trades. So yeah, I believe I chose 0.25% on this one. It ended up being a really good trade for 5R profit. Really clean market structure. I really should have trailed my stop loss on this one because it actually just kept going much lower. This could have been like a 20R position, but you know what? I'm happy with 5. It's better than 0, right? So yeah, so as we can see, price started trading higher, beautifully mitigated this 50% of the order block. Very minimal drawdown, just like a pip or two in drawdown, which was really nice. And then it just took off, creating an actual full break of structure. And from that point on, we never violated any of the highs. So like I said, I should have trailed this one because it just kept going beautifully. The market structure was very clean, but it is what it is. Now, there was even more entry possibilities here. Technically, this was a beautiful mitigation too. Your stop loss would have had to been a bit higher just to cover this little wick here. But you know, this was all very subjective, so I decided not to get in on that. I just held my original position for 5R until it hit take profit. Now, if I scroll back a little bit, actually, let me go back to the 15-minute time frame. I did capitalize on this move as well, but unfortunately, I was trailing my stop loss at that point in time, and I got stopped out in profit for, I believe, was 0.88%. So better than break even, better than a loss, but definitely didn't reach its full potential. But I decided to re-enter, not as a risk entry, just hoping this zone is going to hold. But as you can see, by dropping down to the 1 minute time frame and looking for the confirmation structure. Okay, so this is the entry model for entering a trade based off a higher time frame zone that you're not 100% sure of, right? I mean, any zone you shouldn't be 100% sure of. Like, the confirmation model is useful in many different scenarios, but this one in particular, because given the fact that price already tapped into this zone, traded away from it, but then somehow had the momentum to go back into it, that's questionable, right? So I wanted to make sure that there was a confirmation structure to allow me to go short and capitalize on a potential bearish move, right? So that's exactly what happened here. I waited for the minor break of structure, which also cleared liquidity from these lows. I located the best possible point of interest, which was an extreme in this case, rather than the decisional. This was the extreme. Price traded back into it, hit the 50%, and then took off from there. So I just wanted to make this brief video just to clarify how to utilize the confirmation model on lower time frames, because it is very useful, but I do know that it can be confusing for some people. I know that in this strategy and smart money concepts in general, this is the thing that people struggle with the most, is the low time frame executions. So my goal is to make multiple different videos on this topic and also showcase multiple trades that I've utilized this model, so that you guys can see all the different examples that it's applicable. Okay, so I really hope you guys are studying this carefully, because it does take time to get it down, but the more you do it and the more you see it, the easier it becomes, and you'll just start looking for it naturally without second guessing yourself. So I hope you guys enjoyed this video, and I'll talk to you all soon.